Hi, welcome to another Financial Friday. This week we're just talking about mid-year financial reviews. How are you doing in your progress towards keeping track of everything, towards your income goals? Have you had new assets? All of these different things we're going to talk about quickly. And I'm going to share my screen here and bring up this is just a really kind of encapsulating worksheet for you to use. I'm going to send this over via a PDF. Add things to it. If you have certain circumstances, situations, things you want to keep track of, feel free to put these in there for yourself. These ones are ones that I just want to hit on because they cover different topics for a lot of people. But remember, everybody's tax situation or financial goals are different. So if you have questions, feel free to reach out at any time. Happy to discuss those with you on a one-on-one basis. For now, let's jump right in. Things that you want to think about are if you have or are planning any changes to certain tax situations in 2022. The biggest ones for most people are getting married. You're going to be filing your taxes differently if you're married versus single. If you have the birth of a child or are adopting, that is a change of life situation, and now you have dependents that affect your tax obligations. A divorce is going to change your filing status. So definitely a piece that affects all of this. If you bought or sold anything where you are going to have significant capital gains, even not so significant, it has a tax implication. So we want to address that in there as well. If you or a spouse has a new W-2 income, do we have a new job, something added, a side hustle, any of those types of things where they're getting a paycheck with the taxes already deducted, that's a piece you want to keep track of, as well as loss of W-2 wages. Have you foregone full-time role to pursue the real estate career full-time? That is going to be an aspect over last year that you need to consider going into this next tax season. Mid-year review is a great chance to look at all of those and assess. The other piece that I have on here is the tax withholding estimator straight from the irs.gov website. You're going to put all of these numbers and different pieces in here to really get a great idea of what that potential tax burden is. We'll talk about that a little bit more after we dive into some of these other pieces. But from our past Financial Friday conversations, we know the big four that are kept track of in your books. They are your assets, your liabilities, your income, and your expenses. Okay, so I have those kind of broken out into the four main categories to talk about in or to review and assess these in your mid-year planning. So has your assets changed? Now, some of these are specifically to your business. Some of them are going to be personal, but they all are going to affect your tax burden. So that's why I have them all listed on here. Did you buy or sell your home? Right? That's a personal piece. Your business probably doesn't own that. But if you bought a new home, that means the square footage of your home office probably changed. And now you need to assess what that looks like for your home office to be that tax deduction on that Schedule C. Okay, so you want to assess that now to be prepared going forward. Did you buy or sell an investment property? Definitely a big deal. Your investment property should have its own set of books. Excuse me, my allergies are insane today. Your investment property should have its own set of books. Why that is you're going to be tracking different things, maintenance, utilities, renters income, whatever those things might be, that don't affect your personal stuff, and it's not specifically related to your real estate business. If you're getting onto that other side, we can talk some more about that, but keep that in mind coming into this review. So sorry, excuse me. Did you buy or sell a vehicle? So with that, certain vehicles can have some tax credits that you might want to look into. But if your business bought the car, we want to make sure that all of those expenses are now being tracked in your books. Whether I'm doing your bookkeeping or if it's somebody else, changes like this should be addressed every month and not just every 6 months or only at tax time. The more you can keep track of it every month, the easier all of these pieces should be. For a lot of you that I work with on taking care of your books, we're touching on these things on a regular basis. So we have a lot of these already covered as I finish out your monthly books. But now is still a great time to be like, hey, is there anything that I forgot that we need to assess? Because even the best of us have an issue somewhere on here where we're like, I can do a little bit better, right? So one, I have a client who they bought a trailer to haul back and forth staging materials for their listings. So we have to put that as an asset within their books. Did you buy a new computer? And it might be that the computer itself is under 1,000, it might be over, but all of the pieces regarding your office setup is part of the assets you should be tracking. Maybe it's not going to be in your fixed asset module, but it gets down into the other piece of having a list of all of your office equipment in case of an accidental loss, to make sure it's covered under your insurance at that value, okay, to replace it. I would have a hard time between the recording equipment and the multiple monitor setup system that I have and all of the other things. Any one thing might not be over that fixed asset value of 1,000 that I like to put it at, but all of it together should still make sure that it's under your insurance policy to make sure that you have that covered in case of accidental loss. Did you buy a shed? Do you store stuff out there? That's another thing you can look at. Was a kind of a one-off situation for one client, but definitely something to assess because it can affect you personally and make sure that it's covered under your insurance. All right, liabilities. Do we have anything new that if on your books shows as a shift towards you have more liabilities? Okay, have you added new loans or line of credit, new credit cards? Even if you're like, oh, I'm not using that yet, keep in mind, only have stuff in your books and using those cards only for business expenses, okay? Personal stuff, as I have them listed on here, can affect how these things go. One of them is if it's paid by the business, the interest can then be a tax deduction, or it's a business expense, right? Not a tax deduction, business expense. So assessing where things are falling, who's buying what, where is the asset going to be, that interest on those longer liabilities is definitely played in to the conversation. We can talk about that too if you need to. With the income section, if I'm doing your books, I want the commission statement, the notice of transaction email for every one of those deposits. Sending it over is like ringing the bell. You got it across the finish line. But those documents are what substantiate your income, okay? You want to make sure you can prove not only your expenses, but the income on that other side. So the notice of transaction completion email has some other pieces in it, or the commission statement, however you're seeing it, has some pieces in it that show expenses that are below that what's going to be on your 1099. And so you are able to deduct those from your, as a business expense from your taxes. Sorry, I'm so stuffed up with these allergies. They're just killing me. So besides having tracking those expenses, which we talk about down below, now's a great time to assess some of the pieces that are on there. Part of that being around your caps. Okay. Are you getting closer to crossing the line of a brokerage or a team cap? That can be a huge difference in what kind of revenue or income you're going to see that you're able to keep. Right? That's a huge win. It's tiering up, however you want to call it. They're great to kind of see and then anticipate going forward. One of the things we've talked about on another Financial Friday is when you have crossed those thresholds, can you still put that 20 or 30% aside to cover some of the lower parts of the year? That's what we should be doing now. Say you cross that threshold and you've capped with EXP, okay? You're getting another 20% of your commission into your deposit. So now let's assess, can we put that 20% aside for covering January, February? If we're able to put that over there, then you get to January, February, you've got all of your expenses paid for. You've got anything that is paying to you, like your business paying you as an employee, your payroll is covered that way, as well as assessing if you have any needs to adjust to your tax burden, right? Are you crossing a threshold to a different income tax bracket for the next set of piece of your income and you need to save a little bit more? That's a good time to look at that. So these are the assessments that we're going to look at. If you're going through this checklist, the other piece is, are you paying attention to when your caps are resetting? So your anniversary date can be any time in the year, right? Are you looking at that next commission as if you've capped on everything and you're getting it all, when really it's going to close over that threshold line and now you're going to get a bunch of new pieces? It is what it is, right? You're going to have to owe those again. That's what you signed up for. But having a sense of awareness of when those pieces are going to fall is now's a great time to take a look at that. Okay. Finally, with that income piece, for your projections, for your goals, for your pipeline, are you on track or off track for what you've set for yourself? Now is a great time to take a look. Do you need to do any tweaking to get back on track? Are you over it and you need to set new goals that are bigger and bolder and keep you moving forward? These are great times to take a look at those. And should definitely be part of this mid-year kind of review, if not every 90 days. Okay. So if we drop down into the expenses section, we have your brokerage commissions. We talked about that. For the EXP piece, this falls below your 1099 income line. So your amount towards your EXP cap of 4,000 or 16 or whatever your tier is, that is a deductible business expense. So this needs to be tracked somewhere. If I'm doing your books, we're putting this in there as a commission to the brokerage in your journal entries. The broker review fees, those are should be tracked in there as well. And whether it's your first transaction or your 35th, it's $25 every single time. That is a brokerage fee. That's a deductible business expense. It should be in your books as such. All right. E&O insurance. I'm pounding my hands on my desk as I say this because I want to reiterate how getting these in there is so important. Your E&O insurance covered by EXP, you see it as a percentage deduction of a max $40 every commission, caps out at $500. It's a deductible business expense. It should be in your books as insurance. If I'm doing your books for you, I'm putting it in when I create your journal entry for your income for that ties to your journal entry ties to the amount you see in your bank account. that matches, you're getting all of this other detail in that journal entry as well, one time tied to that address, and kept track of within your books, and you don't have to go search it out later. Okay. Listing expenses, I have starred here because there's two different ways for it, right? Are the listing expenses coming out of your checking account, or are you paying them on your credit card? Then they are a deductible business expense, and you should be keeping track of those as such. Not just that, but a whole other piece that I didn't have even on here is vendors, and I'll make that a whole new Financial Friday because that's a whole bigger topic. But if it's a listing expense that you're reimbursing the team for, the team has paid it and you're reimbursing them at closing, that's above your 1099 number. Okay. EXP is making that calculation and then giving you your income after that's been deducted. So if you take it as an expense again, you're counting that twice. So make sure that you're only counting at least, on this side, it's only in there counted once, unless you are the one paying the bill upfront, not having it as a concession at closing. Okay. How are you doing on your receipts? For most people, it's kind of, maybe I could do better, right? There's some new pieces out there that I'm researching and I'm taking a look at that potentially you give them permission to go in and grab statements and receipts and different things for you. Could be a complete game changer. But one of the other pieces that I have a client doing, which is, it's changing the relationship we have, where I'm not hounding them for receipts on a regular basis. They have the receipts coming into their inbox, and they have a rule in there that if they give it a tag of receipt, that automatically makes it send to a free Gmail that they created that's just for receipts. You can have rules within there that have things filed or tagged or categorized different ways, right? Everybody has their own system. But that inbox that then I have access to is just receipts. Just those numbers that we need to get in their books, tie those receipts to their stuff in QuickBooks. It's been a game changer. And so if you guys want to talk about it more, happy to get that kind of system and the process in place with anybody. But it's been amazing. Okay. He doesn't worry when I call anymore that I'm not trying to track down the receipts. It flows effortlessly, and that's the way we want to try to build these things. So you're not, being your own admin as much as possible. You're out there building your business. So how are you doing on tracking your mileage? Are you using MileIQ? Are you using the QuickBooks mile tracking app? If you are, bravo. Make sure that you're going in and doing the categorization, swiping left, swiping right for personal or business. I personally love MileIQ. No affiliate marketing there. I just love it. It does so much of the thinking for you. I can't swear by it enough. For $60 a year, totally worth it. If you haven't, and you're like, oh, I wanted to start and then I forgot, go back to the last oil change you had. That's the closest to the beginning of the year. What was the mileage that was recorded? Okay, they record it every time, so you should have it on the paperwork, or it should be on the sticker even on your car. What was that mileage? And then what is it today? Go and write it down, because the more you work in estimates and I think so's, the more you're potentially not giving yourself as much of that deductible expense as you could be. So if you're brushing it off because it's a few dollars here and a few dollars there, all of those add up. And so the sooner you feel confident with these and you can check mileage off, like, oh, I've got that covered. you're able to keep track of other things, on other things, and these things are on autopilot. And it's a great time to review it. Okay. The home office expenses should be on a spreadsheet. You're not going to get them in your books, right? You're going to have home expenses, utilities that are going to be an expense, whether you're in business or not. So we don't want them in your books that way, but you can keep track of them on a spreadsheet. And just having the number doesn't substantiate it, right? Like we're going back to school. Show your work is having the statement or the invoice or the receipt associated with them. So I have a lot of vendors that I call them vendors, but a lot of my utilities are emails, right? It's paperless, but there's still some who haven't, either I haven't set it up yet or I haven't figured it out, but I still get mailed copies. They go in a folder that every month I try to get them scanned into my computer, which then feeds to Dropbox. So I have them backed up not only on my computer, but then in the cloud as well. So if there was ever an issue, I have those still documented. Put them in the spreadsheet. Once you have that all in there, you're able to calculate your home office percentage, multiply all those out. Boom, there's your utilities that are deductible business expenses basically done, right? You're able to just basically hand that all over. Here's the substantiations with it to your tax person, and they're going to be amazed that you've got all of this stuff done, okay? Instead of having to hound it and track it down. Beyond this, everybody's situations are unique, and there's always lots of stuff going on. So if you need to add things to this kind of worksheet, go for it. If you want to, every 90 days, take a look at the piece that your tax person sends you, that whole big list, go through it. Because guess what? They're going to need all of that again next year. Everybody gets to tax time and it's frantically searching for all of these pieces. We know it's coming. Okay, we know that these things are going to be needed. So the more you kind of get ahead of it now and assess it again in 90 days, and then we'll do this again in December, you're going to have it way easier. You're going to sleep better. You're not going to stress yourself out. You have other things to do. This shouldn't be taking up a bunch of your time, and we're going to break it down. If you want to talk one-on-one about your bookkeeping, your systems, the things you're putting in place, happy to jump on a call with that. Schedule it with me anytime. Otherwise, let me know if this spreadsheet is working for you, if you have any other suggestions for it. And we'll talk again soon at the next Financial Friday. Thanks, you guys. Have a great day. All right. Bye-bye.